When there's nothing holding you back, what would your thing be?
My name's Jorge Gaviria, and this is my business, Hacienda. I chose my Spark Cash Plus card from Capital One because I earn unlimited 2% cash back on everything I buy. And with no preset spending limit, my purchasing power adapts to my business needs. What's in your wallet?
Hey, you. Are you an entrepreneur?
I'm a sales trainer.
I'm a network marketer. I'm a coach.
I'm a DJ. I'm in e-com.
Are you looking to grow your business online? Do you want to build a network? Do you want to take a vacation and not feel guilty about
Wow,
it?
ads?
Then you have to come to Funnel Hacking
I
Live.
didn't apologize for that. Ads? What account am I in? I'll switch it over. Weird to have ads, huh? How you doing? Hey, good morning, Raymond. I got to tell about three bad brothers you know so well. Started way back in history. Mikey! Hey Raymond, I started a new group. It might be something you're interested in. Hang on, my phone just buzzed. Buzzing and I'm buzzing. Base! How low can you go? All right, you guys ready to get going? This year, Halloween for on a weekend. All right. Oh, right on. All right, I got to move this over there and that over here and this over there. I think, yeah. I think I can just close all that, and then I look at this, and then I got that. All right, I think I'm good. I think I'm organized. Let's get on with it. Guten Morgen. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne. I'm a currency trader just like you. I like fundamentals. I like technicals. I like to figure out why markets are moving, not just how or when, but also why. So I like fundamental and technical, and I'll try to cover both. But ultimately, you're the boss. I'm here to serve you. Let me know how I can help. In fact, we'll just kind of make this request day where you simply let me know what you want me to cover. Yeah, how about that? Ooh. Anywho, yeah, my coffee's cold and my ghee is re-solidified. So it's like there's little chunks of butter in my coffee. So anyways, let me know what you want me to cover. Gold, oil, Bitcoin, dollar pairs, yen pairs, stock markets. I think we should start with the stock indices, but ultimately you let me know. If you look at the description below, there are links to resources I believe you should check out. There's a free training course. There's a free video presentation, how to triple your profits without changing your charts while spending less time trading, that's really cool. There's a link to my book. There's a link to my trading community, Investor Bootcamp. There's a link to tradeplans.ai, so you can get instant feedback on your technical analysis. It's totally for free. I'm so stupid. I've spent many, 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 many thousands of dollars building artificial intelligence that can give you instant feedback, and I'm not monetizing it. I'm just doing, it's totally for free. So anyways, you should check that out. The link is in the description below. There's a link to tradersway.com, and they are an ethical, trustworthy foreign exchange broker that would love the opportunity to earn your loyalty and your respect like they've earned mine. The link is in the description below. You should check it out. Meta says ghee is not supposed to be in the fridge. Yeah, it's not actually. Well, it's in my coffee. But it's chunky today. Anyways. So, yeah, so check those things out. They're very helpful, very useful tools. And then, of course, let me know how I can help. If you could, click the thumbs up button. Tell YouTube this was quality content. That'd be great. And let's see what you guys said. All right. So you guys say 57% said risked on, 8% said risk off. And this is QuantBox. Link is in the description below. QuantBox, to get this data, is looking at the VIX, yen, dollar, 10-year yields, gold, and S&P 500. On 3 different time frames, daily, weekly, monthly. Mixed. 0, 0, 0. Amazing. Look, literally, add them up. So it is mixed, but I would agree with you, mixed, but with a tint and a hint of, risk on. Maybe, just maybe. Oops, I don't want to start there. I want to start here. Just a hint of risk on. We'll start with the U.S. stock market. These are daily candles. And maybe just climbing. We are at about yesterday's close high. Be interesting if we get green on the screen from here. Emmanuel, I don't scalp that much anymore. But back in the day, it could be 20 or 30. But I spend most of my time spot, swing, and carry. Maida says, why are they so solid then? I don't know what's going on there. It's the powdered form, though. That's the deal, Maida. The ghee is powdered ghee because there's also MCT oil in it for my brain, keep me smart. Anyways. So you can see there's the close and here's the open. We're slightly higher than yesterday. So it'd be interesting if we get green or it comes down and you could fib yesterday's range. So let's do it on a 4-hour. And yesterday's range is kind of like, I don't know, we can pick this range if you want. So that's the last 2 days range. All right, fair enough. Cool Modi. Japanese stock market, ooh la la, has hit the monthly, or is it weekly? Hang on. There we go. Weekly. Okay, we came down, monthly support, weekly target. So we've already done that. Drag it across. Up to the monthly target. Now, Central CPP is the support, so I'll take it up to that level there. Basically 35. Oh. Okay. Down in August, up in September. And of course, we know that the up is supposed to start the 3rd week of August. Oops. Okay, which is actually here. I mean, you could go 1, 2, 3. Okay. Whatever. But quite literally, the first day of the third week of August, up started to present itself, and that is risk on, and that is what was planned. Also, July 1st is the setup for the down. Third week of August is the setup. Okay, first day of July, down. Okay, third week of August is up. Can anybody confirm that? Literally the first day of July, I said in January. And then the third week of August, I also said in January. Yes or no? Cool. Thank you. Boo, 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 boo. Amazing coincidence. So that's the Japanese stock market. How about the Australian stock market? Do you remember we were in this mode, and I drew this with the hypotheses that we have a change in direction. Okay, we were doing this here. Okay, and I said what you want to do is look to see if we are changing the direction of the trend from it was risk on to risk off to risk on again. Okay, that's what's going on here. And this is starting to look compelling, huh? Look at that, even double bottoms and stuff like that. And looks like we're on our way up to the top of the up channel. All I did was I drew a line from here to here and then did a parallel. Do you guys remember doing this? The equidistant. That's all it is. See, I can move this. Cool, so it just might be heading up. Okay, M2, kind of, not really great, but the ultimate target would be a higher high, 76. I don't know if it's that great, but anyways. There you go, Australia. Hang Seng, we were talking about yesterday in the swing trading group. Day traders and swing traders met for a 4-hour meeting, 3.5 hours, I guess. Interesting. So, what is it that you want to do? Are you a bull or a bear? I don't know, Wayne, I can't see your MACD. Really? I don't know, Wayne. MACD gives me all I need. Really? All right. Morning, JP. How are you? Awesome. Excellent, excellent, excellent. Yeah, long meeting yesterday, huh? Yeah. Ugh. Long but good. Johnny, do you still have the link or the name of that lithium company you mentioned in the meeting last night? I accidentally closed the browser. because they had a training course on lithium, and I was going to put that on my to-do list of exciting things to do with my weekend. Learn about lithium. So if anybody has the name of that lithium company out of North Carolina, I want to do that lithium course. Look at DAX. How'd the DAX do? All right. That's daily, by the way. Not great technicals, but it's not collapsing off resistance anymore. Oh, thank you, JGB. Albemarle. This one. Yeah, I believe that's it. Albemarle. Cool. Thank you. Appreciate that, JGB. No, but yeah, I got it. Yeah, I found it. It's this one. Albemarle. So anyways, so I'm going to take that lithium course. Boo-doo-doo-doo, boo-doo-doo-doo. So risk on here. Good. Okay. Got to get a new higher high, though. Let's take the old bottom, old high. Would like to climb above 16,000. I don't know if we can do that today, but good. It's better than having it collapse down on us. FTSE doing great. Look at that, huh? Great. Look, we drew the trend. Not steep enough, though. It's so funny. It's almost vertical, the way I drew the trend, and it's not vertical enough. Literally a 90-degree trend. Okay, and breaking, huh? Every breaking trade on the floor tells the next there'll be one more. Every gambler knows that to lose is what we're really there for. All right. Let me drag it all the way. If you're going to go. All right. Yeah. Neato, huh? Amazing. Amazing. Zip over and let's do gold, oil, and Bitcoin. Okay, we're at a level of resistance here. We've actually hit our goal for the day. So the day trading trade is over. This was the best you could hope for Friday. So if you're going to continue to be a bull, you're going to buy a dip probably later today, but it's not a trade for today. Yeah, I got it, Johnny. Thank you. So if this wouldn't be a trade for today, although you might get it today, it's actually a trade for Monday. So you enter it Friday and you hit target Monday. Okay. So that's what I think. So this area in here is probably a buy zone. You know what I'm talking about? Yeah. So what this chart says is you need to measure a dip, for example, and then you make your decision, and this is where your stop will be. Right here. So make sure you have the right lot size. Okay. So let's say this is your entry. I didn't want to do it that way. Let's do it like this. Okay. Let's say this is your entry. And this is your stop. And this is your target. Okay? So what is that? Your risk reward ratio, you have about 50% more. Excuse me while I stretch. You have 30 to 50% more upside than the risk you're taking. Yeah, so that doesn't sound like a lot, but the thing is that's not actually how I trade. So at that point, I'd be able to move my stop at break even, and my target is actually there. So I'd enter a trade around 112, let's say, 113. And my target is 180. So I'm risking 10 bucks to go for 70. Right? Yeah, there you go. 7-1, baby. What do you stink? Smell like a plan? Now I probably need to adjust this. This basically 7/8 So I have to be very aware of my risk around 40, we'll call it 45. So it's really 3-1 in the real world. I need to adjust. 4-1 ain't bad though. All right, all right, all right. Okay, oil made it to 91, but the target is 90, not quite 94, so we'll call it 93. It's actually 93 and a half. So there's a potential for one more hurrah. And then a bigger pullback, lower high, lower low. Bring it on back. Bring it back to me. Yeah. Oh. Bitty, 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 can't you see? Sometimes your trades just hypnotize me. And I'll just love your flashy ways. Okay. So 31. It's a big, giant, maybe hypotheses, but that's all I'm trying to do. Thank you, JJ. Every bringing one. All right. Boop it doop. Do 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 do. Oh do 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 do. Do 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 do. Looks like August usually has a negative number. We got a positive? Wow. Yeah. Wow, how crazy. Wow, crazy. Way down, way up, way down, way up, way down, way up. Wow, a little bit of volatility. I'm just looking at commodities. But look at this, like 10 years in a row, August. Down, 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 up. Down, down, up, up, down. And the ups are tiny relative to the downs. So, that's a big up. That's unusual. Huh. So up, yeah, up, 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 up. Okay, so this means what? Dollar strength. Think of it this way. We're making more money than usual, and we're spending less money than usual. More money's coming in, if you want to look at it that way. And not in absolute terms, but in relative terms. Okay, now here, that's year over year, it's come down quite a bit. That's nice. That's noise. Let's just look at agriculture. Let's get rid of some of this other stuff. Little bit of a up, right? Little bit of an up. You see that? Let me get rid of all. What's this other one? And what's the blue one? Oh, exports. $23. So what is this? Agriculture, then what is that? Oh, I see. Last year versus this year. Okay. So yeah, prices are very low. And now there's some up. Okay. Now, prices are recovering, so exporters will benefit. Now, the United States happens to import a lot too, but what about exporting countries like Australia? If commodity prices are going to rise or continue rising like this chart has shown, and this is specifically agriculture, well, you know, Australia exports a lot. Brazil exports a lot of these types of commodities. Canada exports a lot. New Zealand exports a lot. And so that might support some of those currencies if we're looking at agriculture coming up. There we go. That's what I wanted to see. All right. Do, do, do. So I wonder if this decline, let's call it like grain prices, for example, a decline in grain prices. Maybe that decline is over and we go to a food inflation regime. But you didn't know that the BLS was so much fun. Yeah, gasoline and shelter up. Yep. It was nice to be able to look at this and then just say, oh yeah, retail sales headline will be high. Let's look at the indices. See where we're at. Do 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 do. Boo, 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 doo, boo, boo, doo, doo. Do, 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 do. Do, 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 do. Do, 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 do. Do, 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 do. La-dee-da-dee-da. This is me just doing my work. What you doing? Working. You can even go farther out, huh? See, so commodities are looking more and more bullish, huh? Boop, boop, boo-doo-doo-doo-doo. La-ba-boo-doo-doo. And here's a big change. Wonder how long that'll last, if it's going to be around for a while. Kiwi also looking quite bullish, don't you think? Richard, isn't that what QuantBox does for you automatically? We can do some comparing. We can do some comparing. Let's look at GDP today. We don't need to go to 1960, but we can go to 2010. The biggest thing he asked, how did you handle the frustration in Forex when you were learning and nothing seemed to be working? I went on a business planning retreat with myself at the Ritz-Carlton in Half Moon Bay, California. Right here. My room was on the other side, though. So I remember it like yesterday. My room was, I guess it was here, facing this way. Yeah. Now I've stayed in this room. I've stayed in this room. I've stayed in this room. Yeah. Anywho, yeah. So that's what I did is I focused on business. Focused on business. Does it just loop? That's it? Nice. Well, that'll convince me to spend $2,000 a night. Yeah, all right. All right. So anyways, yeah, that's what I did. I focused on the business. You have, in my opinion, you have to take yourself away from the trading attitude. Now, I talk about this in my book where, our common thread is that we're all, what's the name of that hotel? Ritz-Carlton, Half Moon Bay. I think our common denominator, our common thread is that we're all entrepreneurs. I talk about this in probably the opening chapter, and that it's our greatest strength, but it's also our greatest weakness. And so very often on Hell, the frustrating periods are when you're forcing trades that don't exist, or you're trading old plans even though you're trading old trends even though new trends appeared. And there was a period when I didn't understand seasonality, so it all seemed to be mystical. Trends would appear and disappear, and I'm like, what? Why did it all stop? So anyway, at that, that most frustrating period of my career, I decided to step back and analyze, not as a trading business or like as a trader, but as a business. Because I realized like I had no goals. My goal every day was to make as much money as I can. And then after a while, I'm like, that doesn't actually make any sense. Because any business could say, what's our business plan? To make as much money as we possibly can. And like that's just not how a business works. You have goals and action items that help you accomplish the goals. So I said, I really need to step back because I'm frustrated with my trading. So I need to really step back and regroup and reorganize and plan. So that's what I did. So I was there 3 days, I guess, 4 days, 3 nights. And all I did was plan. And I spent, 30 hours working on spreadsheets, for example, not trading. Building pro forma cash flow statements was one of the things I did. So that's how I handled it on Hell. To step back and say, stop looking at it as a trader, start looking at it as an investor, or start looking at it as a business person or as a business, and have that bigger picture. And so like things change when you're waiting and you're doing something like what I preach every day, where I'm like, okay, I think there's going to be risk on appearing in the 3rd week of September, so I need to prepare for it. So if the dollar's strong for 2 or 3 weeks in a row and it doesn't benefit me, I'm not upset by it at all. If anything, I'm waiting patiently for my opportunity. Now, the thing is, if I wait patiently and my opportunity presents, then I say, aha, that's the thing I've been waiting for. And now I do a lot of trading because the market conditions are favorable to the strategy I want to employ. And then I do a lot of trading. And then if that doesn't happen, the market doesn't present the way I look, and I don't have the right strategy, then I basically don't trade. Okay. Richard says that his thing is time. He runs a business, raising kids, studying fundamentals and technicals. Yeah, so I ran a business, raised children, and went to Harvard full time. I even lived in the Harvard campus in the summers. So I get it. Is there any method? Sleep less. Cut back. No vacations. No going out, no parties. No football, no television, no movies. Yeah. So anyways, here's the comparative analysis, the whole world. Of GDP. See how quickly it is? Yeah, I mean, it sounds like a facetious kind of, or even a bullshit response. It's not, though. You just have to identify all the things that you're not going to be able to do. It's hard work and it's sacrifice. It's not any fun. I never said it was fun. But you got to make it fun. So that's interesting. It's not letting me go back. Yeah, it's not fun. It's hard work. So one of the things I do is I try to reward myself, to make it fun. And so, for example, let's say I don't want to study. I'm tired. This very often happens on a Friday afternoon. I just want to stop working. Okay? All right. So one of the things I can do is to say, well, how could I work and make a reward for myself? Now I could say, well, I could work 2 more hours. And if I work 2 more hours, I will take myself to lunch. Or if I work 2 more hours, I can do it outside on my laptop. I'll have a nice coffee. If it's a nice day, I don't think it's actually a nice day, but let's say it's a nice day outside, the birds are singing, the sun is shining, it's not too hot. So I'll take a coffee or a tea and I'll go outside with my laptop. Maybe I'll have a cigar and I'll work outside. But that's how you kind of balance it, Richard and Lucas. Or that's one strategy that I try to do, where you give yourself a reward, you plan it out. If you work 2 more hours, then you do something fun. If you work 2 more hours, you buy yourself a treat. You do work 2 more hours, you go out for lunch, something, but something to just keep you going. Maybe you change what you do. So this isn't always possible, but you do 2 hours of work, you take a break, and then you change and you're like, okay, the next 2 hours you're going to read a book, or the next 1 hour you're going to read a book, just to change it up. Okay? But it's been difficult. I've been doing this for 20 years. It's difficult. When I was doing venture capital, it was very difficult. When I was running my startups, it was very difficult. Like running startups and having employees and stuff like that. I'd work, more than 12 hours a day. But I would walk home and I knew, for example, that this place, I can't remember what they served, falafels, I think, closed. I think it was like, for some reason, 1 o'clock in the morning? Midnight. Maybe it was midnight. Can't remember. I'm like, I will work to midnight and pick up a falafel on the way home. So if it's 10:30 and I'm tired, I'm like, I like the falafels though. So I'll just grind through another hour and then kind of clean up and take myself home and stop and get a falafel. So I'll just work another 90 minutes. My first office that I ever had was 7 feet by 7 feet square with no windows. And it was on Montgomery Street. Or was it Market? Market. It was on Market Street. 555 Montgomery. No, that was a different. Anyways, I had an office on Market Street in San Francisco, and BART would close at a certain time, and so I'd work to the last BART, and then stop. I like food. I like to eat, so I would always like stop and get some food and then, just some sort of reward to keep going. On Saturday, I would say, I'm going to sleep into noon and then work from noon to midnight on a Saturday and then go out. So the reward would be walk to work in the morning. I hadn't seen the sun in a long time. Maybe pick up a coffee and pick up a sandwich and just eat outside and then go to the office, that kind of stuff. And you just got to keep yourself going. Yeah, we'll work for food. But it's constant sacrifice. And so psychologically, I've always found it important to stay happy. So whatever that does to keep you from getting down because of the grind can hold you down, right? Give yourself little moments of joy that psychologically reward you. So again, here's the classic example. Sunday morning. I don't want to work. I've worked all week and I've probably worked all Saturday. Okay? My wife is probably mad at me. My kids probably hate me. And I'm like, I got to keep working. All right. So Sunday. I print out a bunch of economic research. Or sometimes I used to get newspapers and stuff. Sit outside on the back deck with a cappuccino and a cigar, and I'm going to spend the next 90 minutes reading economic reports. Oh. It's work. I'm not doing the other things I could be doing, like what? Watching golf on TV? Well, instead I'm outside. I have a cappuccino. I have a cigar. I got the sun on my face. And I'm reading economic reports. Is it work? Yeah, sort of. Okay. So, anyways. Okay, so the first cell was up here earlier. This was right before my quant box live. So this must have been about 6 o'clock in the morning. The setup of the sell. Then the lower low, lower high. Right, pretty obvious. And now you would be looking for something similar here. Okay, so if you wanted to, you would do something like auto stop. I'm going to redo it, and that's my standard, but I could do a 2020 or 1330, 1530. We'll do a 2020. Okay, okay. There's one scalp. Target, stop, take a walk. Yeah, I like building Excel spreadsheets. Yeah, right? Now, could I have done this trade better? Yes. So how would you want to do it better? Well, you want to this is the opening range, by the way. This is the setup that I use for trading oil. But so anyways, we got some ranges identified, some levels of resistance identified. Okay, now. So down, three-wave correction, and maybe some more down. No, I haven't. So how do you do that? You said, have you tried saving a chart on MT4 as a spreadsheet? What are you talking about? No, I don't even know what you're talking about. How would I do that? I don't even know what you're talking about. Interesting. Okay, Pig finally made it to the ultimate support. Whoa! Okay, 901, let me check. You know what did really well yesterday is what was it? Rio Tinto, I think, moved yesterday. Had a monster day. I think it was Rio Tinto, not. I suppose it's not going to let me know now. Yeah. Check this out. Let's find it. I don't have a stock chart on this account. Rio Tinto price chart. Price chart. Yeah, look at that. Just even recently, like yesterday and the day before, 13 to 4, that's in one day, from 72 to 76 and a half. Up 17% this month. And I'm on it, baby. Okay, isn't that cool? But like, my gourd, I also own this one. And look at that one for the month, and it's not nearly as good. But it's, okay. But if we go back to Rio, so Rio, something's obviously going well for it. Dividend yield, no, it doesn't have a, we'll go to Yahoo. So look at up almost 5% yesterday. Yesterday. Okay. Anyways, where does it show dividend? Beta. It's okay. And here we go. Dividend yield 6%. It's a little higher for me because I paid less than this for the stock, so my dividend yield is a little higher. Kind of interesting. So how'd you like to earn like nearly 10% a year dividends? Yeah. Right. So here's the interesting thing. So you have, right, let's say you have a stock. Okay, it costs $50 a share, but it pays you $5 a year. So there's your 10%. But then if you buy 100 of these, okay, so now you have $5,000. Right, so now you have 5,000 invested. And you make $500 a year in dividends. Okay? And then you write out of the money call options and sell them to dum-dums. You sell them to dum-dums. And you don't expect any of the options to ever be called. They're all going to expire worthless. The idea is if you do it monthly, 30-day call options, and they expire, and now you're doing this as a job, so every month you got to spend an hour and you write some call options. You could probably make, let's say, $500 a year more. So at the end of the year, you have $6,000. And now the interesting thing is that doesn't include the stock price. Well, that would be different for every stock, Jim, because of the different, levels of volatility and such. Every beta is different. Every standard deviation is different. That kind of stuff. But I suppose you have to figure that out. No. Well, the right is you would do something like, well, it lies on your possibility frontier curve, their curve of indifference. So risk versus reward, and there's weird ways to do it mathematically, but it's always a decision. Yeah, I mean that's your alpha. You got to work on it, right? But yeah, the general idea is out there though. Yeah, the idea is out there though that you can earn, let's say, like if you earn $1,000 on a $5,000 investment, that's 20%. Now maybe that's too high, but I'm just giving you the idea. Like, what if it was 13 or 14%? We haven't even included the actual stock price. So if the stock went up 10% in a year, dude, my stock went up 10% in a week. So that volatility makes it tricky, and that's why I can't actually answer Jim's question. Every situation's different. It's math. Math goes into this. How much time is left, because there's a time decay and all that. But nonetheless, the general idea is if the stock went up 10% and it pays a 10% dividend and I write call options against them, which are basically fancy ways of calling it like throwing out a limit order that I never expect to hit. So like, for example, let's do this. I'm going to buy the pound dollar. Boom, I own the pound dollar. All right, let me put a limit order right here. How much money did I just make? None. But what if you got paid for that? And you said, well, I think this is going to go up, but the maximum I think it's going to go up is this area, and then I think it's going to go down. So you actually, using options, you'd get paid money for this. And your money that is there protects you from the potential losses down here. That's right, Jim. Yeah, it depends. Yeah. And of course, you would do more than that, in my opinion, but that would be the basic. But the next thing, Jim, is like, there's other questions like, where in the business cycle are you? And where in the year are you? And do you think the general market forces are up? Okay, neutral, or in this case, neutral this way, right? Or up and up and up. So like, what do you think the next 30 to 90 days is going to be like? Yeah, I like to answer that question too, like not just the implied volatility and beta of the stock, of the individual stock, but also the underlying broad market and economic conditions. So I'll still think about the Fed. I'll still think about seasonality. I'll think about the S&P 500 and not just about Apple or Rio Tinto. And then put them all together and make the best decision I possibly can. Now, in the case of this trade, I would want this to be going up because I bought it. Okay? But if I thought it was going to go up from here, so I bought it at support. So let's say I think it's going to go up between now and the end of the year. I could use, instead of a limit order, I could use a call option. I could write a call option. I get paid money today. The money goes into my account instantly. Now, if pound dollar takes off too quickly and has a monster month, and by the way, that can happen in September, and I know that. So it changes the strike price. Suddenly R3 is in play. Typically it's not. But that's, again, that's my alpha. That's my decision-making process. If I thought we wouldn't go any higher than this, I could write an option slightly higher because I don't actually want to get out of this trade. And then the next month, right? The next month, would go like this. Now, I know these are weeklies. Just pretend that these are monthlies. I mean, hang on. Maybe I'll just do it on a higher time frame. Let me start over. Let me start over. Let me clean this up. Okay. All right, so let's, this is down, and it gets complicated to make this a down trade, but let's say over the next 3 months, I thought this was going to go this way. Okay? All right, so I own it here, and I could write an option and sell it to some idiot Now, why would I say it that way? Why would I consider him an idiot? Because I expect it to be worthless. It's garbage. Yes, I think the stock will go up. And some idiot's got ambition, baby. Okay? But that's way too optimistic. So I'm like, I'm going to write an option there and say, I'm going to sell it to you at that price. At 126, just over 126. I'm like, we're not going to get there, but some idiot's going to pay me money for the option. And of course, if it goes above 126, they're going to call. They're going to call the option. They're going to call the stock. See, this is what happens. If it goes above that pink line, which I don't expect to happen, but if it did, well, I have to give the trade that I'm already in. You see, I bought pound dollar, so I have to give him the pound dollar trade if it goes up there. But I own it now. So if it goes up there, I'm in the profit. And I can just give him the trade. But you see, that's what a limit order does anyways. You're giving the trade to somebody else at that price. Hang on, it's supposed to be here. So it's even higher than that, okay? So let me put that back. Okay, there you go. So I think it'll go up perfectly fine. I own it, and I think it'll go up. Why do I own it? Because I think it'll go up. So that doesn't change anything. I own the asset, and then I literally write an option. And there's all kinds of reasons why somebody else will want it at that price. Very often it's insurance on something else they're doing. Maybe, I don't know, whatever. I don't even care. I think it'll get to that price. That's why I'm buying it. I own the asset. I just don't think it'll get there in 30 days. So it expires worthless and I get to keep the money. I wrote the option. I gave somebody the opportunity to get my pound dollar trade, my position, my ownership. I own these assets. I gave somebody the right to buy them from me at a higher price than it is now. So I buy it and I put a limit order. It never gets there. So I get to keep the money because remember, I just sold them the right to buy it from me at a higher price than that. So if it does one of these things and we go into a new month, well, that limit order goes away. It's worthless. But I already got the money in the bank. I've already been paid. Sweet. So now I'm in a new month and I say, what's my new limit order? And of course, these pivots would update and the new target would be up there. And so I would just do the same trade. I still own the pound dollar. So let's say the price is now at 125 and my new my new M5 will actually be higher. I hope this isn't confusing because I'm doing this in a bearish market. But what I do is I want to put the forbidden fruit just slightly out of reach. Like I think it'll go to here, but not all the way up to there. But if it did, what happens in my worst case scenario? My worst case scenario is that it goes higher. Okay, it goes higher and it goes out and the person that bought the option from me calls it. Give me the pound dollar you promised me at 130. Well, Peter, I'm assuming like 30 to 45 days in advance, right? Warning. So anyways, well, what happens my worst case scenario? I give him my pound dollar and I'm out, but I made money. I own it here, and I gave it to them there. I keep that. That's mine. Plus, if there's any swap, or if this is a stock, we're talking about dividends. If there's a dividend, I keep that too. So I made asset appreciation on this, right? Capital gains plus income from the dividends I've collected, plus the premium. So I collected a premium here, and then I collected a premium here. And so I'm okay. I just gave them my position, which is the same thing as a limit order. It's letting the winners run and getting paid for it. What a clever boy, huh? Yeah, so the idea, Peter and Jim, is that I want to let these winners run, and I want to sell the right to call my position higher than I expect it to actually go. I don't actually want to get out. I just want to pick up some more income. But if it did get hit, what just happened? I'm a bull, and it went so bullish that it was more bullish than I even thought, and I was bullish. So one person might look at that and say, oh God, well, you got out way too early. Well, very often you do want to get out on situations like that where you have this incredible spike, and then what? You hit monthly pivots and it collapses. But I use monthly pivots, so that's where I would have written the strike anyway. So it would probably be a situation where I'd want to take the money and run anyways. But either way, I'm profitable. You can't lose in that situation in the sense that you collect the premium 100% of the time. You own the position, whether I'm talking about pound dollar or owning a stock. I own the stock, and it's going up, so I'm making money there. Now, it becomes a hedge if I own the stock, and what if the stock fell 10%? Well, I still get a 10% dividend if I'm talking about Rio Tinto. So I'm hedged in that sense. My dividend protects me from the downside. But what if it drops 20%? Well, I can also write these options on the way down because everyone thinks every time you hit support, it's going to bounce and skyrocket. So I can continue writing and earning income on the way down, that income offsetting some of my losses, right? So the income from will reduce my level of risk. The dividend will reduce my level of risk. Now, a lot of stocks like Rio Tinto and BHP, which I own, downside of that stuff is they're annual dividends. You only get paid once a year. You're like, oh my God. So you don't get paid very often. But here's the nice thing. If you're doing like these 30-day call options, you're earning money every month. Yeah, writing those. Against assets you already own. I'm not talking about all this leverage nonsense. Like you don't own anything, but you're going to write options, naked options. That sounds stupid to me. That's just, you ain't got no money, so you're going to gamble like crazy. Remember, the only people that gamble, and I'm not talking casino gambling, there's an entertainment value. But those that gamble in the financial markets don't have any money anyways. That's why they're gambling. Or they're gambling because they have more money than God, and they put some gambling money aside to like play with the stock market. Once again, that's not normal thinking. Most people have too much to lose. So you would never do a naked option strategy like that. But if you already own it, then I like the combination of collecting dividends. So maybe you want something that pays you quarterly dividends, plus every month earning a premium. So now you have dividend income, you have option income, and you own assets, you see? Yeah, well, by the time you get, the closer you get to the expiration, the time decay gets the premium to zero, right? So that's why you right, Peter, you might be thinking like 30 or 40 days out. If you use quarterly pivots, then maybe you could do, 30, 60, 90 days out. Okay? But these are all decisions, right? Jim is alluding to that too. Like, well, how do you, where, like what strike? Well, it's like asking me, well, what's the right price for pound dollar? Well, are you day trading? Are you scalping? Are you spot? Are you swing? And then all of that is on top of the layers of, well, what's your fundamental bias? Where are we in seasonality? Where are we in the business cycle? Do you think the market's going to go up or down, right? And you want to take all of this into consideration. And so you might just say, well, maybe, right? Maybe you go beyond 30 days. I don't think a strategy like this would work with less than 90 days, less than 30 days, because then there's almost like you might give away your profitable position and earn almost no income, right? Like for 0.5%. You're like 0.5%, I don't need 0.5% extra profit. I'd rather just sit on the trade that's already working, right? So anyways, it's got to make sense. Right? It's got to make sense. But anyways, sorry if this got too high level. But I don't know if anybody else on any other YouTube guru talks about strategies like that. But I like making money, and I don't like risk. So I am very consumed with the idea of I want to lower my risk and I want to make more money. So I hope you appreciate the conversations. If so, maybe click the thumbs up button, tell YouTube like this is the next level YouTube stream. All good in the hood. So, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. Take care of yourself. Trade safe.